man. We're recording live from the podcast studio at 1871. Representing East Chicago. Vlad here with
Getty Hill from GFX Labs and Oku Trade.
Awesome, man. It's good to have you here. You've been in the Chicago circles for a while, and we're all very excited to get you in the studio and talk about what you're working on. Talk a little bit about yourself. When we talked previously, I think you mentioned, were you raised here?
Yeah, I actually grew up here off of like a block off a Stadium Division. So went to school here and everything. It wasn't until like college where like I really lived anywhere else meaningfully.
Yeah.
Lived in Denver, Florida for a couple of years. Eventually for work as well. Denver for a couple of years. And then when we wanted to actually start GFX Labs and go out on our own, we decided it was actually Chicago was the best place to do it. So we moved back to Chicago, myself and my co-founder, Eddie.
Yep.
And built the company here.
That's awesome. So what were you doing prior to GFX?
So after school, Eddie and I were working at a Chicago prop trading firm, although it was traditional trading firm that was started in Chicago called 4170 Trading on the traditional side. And then we worked for Grapefruit Trading. That was the actual crypto side of the company.
Nice.
We worked out of Miami though. So that the whole crypto side of the company was down in Miami. The traditional guys were up here for the most part. And so we lived down there that time, even though it was Chicago based.
That's super cool. What was your background in school, in like finance, or are you a developer?
I was originally going to school for aerospace engineering. So yeah, like
all the big brains end up in crypto.
I don't know about that, but I enjoyed things that flew and can go fast, and like always loved drones and model airplanes and building that sort of stuff when I was a kid. So like you talk about like in an alternative timeline in crypto, like where was I going to end up? Like, yeah, I probably would have been like designing like small UAVs for the military or something like that.
Nice.
But here I am now, like almost 7-8 years into crypto.
Yeah. I mean, once the crypto space sucks you in, I think you're pretty much a lifer. It's just like so much happening, right?
It's so much happening. And, I was dabbling in the space, I would say, in like 2016, 2017 era. It wasn't until really I got full-time at the trading firm in 2018. But it was when I touched like Compound for the first time, when it came out, before there were stable coins, before like the only stable coin that there was single collateral DAI when it eventually came out of Compound. So the first time I like did a load on there, I think it was like basic attention token back in the day, where like it all kind of clicked for me. I was like, holy smokes, you mean like I can borrow money from someone or something, I suppose, for any amount of time at whatever the rate it tells me, and I know exactly what I'm getting, and I know that if I want to pay it back a moment later, I can do that. And like somehow that whole experience was so eye-opening about like how finance could be done that I managed to stick around for another like several years.
Yeah. Did you have this feeling of like, oh my God, like the tools of like Wall Street are now available just like on the internet to like anybody?
It showed me what Wall Street could become. I think a lot of people in the space misunderstand trading firms and private equity and funds and think like these guys are our enemy. And it's like, no, like these are actually amazing tools of capitalism that have allowed the United States to thrive. These guys just want to make money as much as we do.
Sure.
Ultimately, they're going to use whatever tool they can do so to like make the most money they can and provide, the best service they can to whoever they're providing that service to. I think DeFi, these protocols, etc., we can get them to adopt these tools over time, and as we mature, like that to me is what's eye-opening and possible. It's like, okay, we can change like the standard quo that we all been on, like wrote on. The same way that people in like the 1950s and such, and like 60s looked at how like equities are traded on paper and over the phone. Mm-hmm. We look back at that and be like, that's crazy. Like I think 30 years from now, we're going to look back at how securities are traded today and think the same thing, essentially.
So what do you think is like the biggest holdup to like increased adoption? Do you think it's more literally just like, it takes a long time for these things to get built out and scale, and that's as much of a challenge as the regulatory side? Or do you think the regulatory side is creating problems in terms of like moving faster?
As much as I would love to say like the regulators are the full problem, the world's a lot bigger than the United States, as much as even like my American-centric self would like to believe. If it was purely regulatory, then we would see this we would see us getting lapped in other places. And at this point, like sure, like maybe it's a lot easier to build a crypto company in Singapore or in Hong Kong or just entirely offshore in the Bahamas or something. Like these guys aren't figuring it out yet, though. Maybe some of them are a bit further ahead of the curve than some of the American companies. There's obviously, I can tell firsthand, there's a lot of friction to trying to build a crypto company in Chicago or the United States. But I think at the same time, it is just like a reps and a time thing. We need more people in the space who are long-term thinkers. And unfortunately, the industry doesn't exactly incentivize for long-term thinking as much as we would like to say it does.
Yeah.
But we've come a long way over the last 3-4 years. And I imagine it's just going to, like it has in the past, continue to accelerate the amount of progress we're able to kind of squeeze into a year.
Do you feel like Chicago is well equipped to provide that support system? Like what are we missing here, and what are the things that we do well at providing for, companies like yours?
Yeah. So, I mean, as far as things to do well, like we thought about like where to start the company. We approached it pretty like logically. We're like, okay, well, we're going to do it in a major American city. It needs to be a place where you can like hire people out of. Like GFX has an office in Chicago. We're not like a work from home company. Yeah, we have some remote people in the team, but we have an office at like by state and Grand that a bunch of us go into every single day.
How big is the team?
We're 20 people. About 10 of that's in Chicago, and then the rest kind of spread out, but bring them into Chicago often. But as far as Chicago goes, it's, it has everything in my mind that New York can offer, maybe at a slightly smaller scale, but we're still the third largest city in the nation. Sure. We have the greatest fintech companies and trading firms in the nation based in Chicago. So there's a good talent pool here, a lot bigger talent pool than when I was in Denver. Like Denver is fantastic. It has a lot of these qualities. The scale is just not there.
Right.
And you also want somewhere where like people are nice. Like I really didn't appreciate how great Chicago was as far as the Midwestern culture was until I like lived in other places. I'm like, wow, people are just friendly and nice here. Food's good. Restaurants are good. Cost of living's not so bad. And I can like walk down the lake path whenever I want on a nice summer day. And like those things are just like amazing. People don't understand just how great like Chicagoans really have it. Okay, the flip side is maybe like politically speaking, the city is in a not so great space. But these things are like solvable. We have an election of our own coming up soon. So hopefully some of these things get sorted out. But in the grand scheme of things, it's like, yeah, I don't have any regrets about starting the company in Chicago.
Yeah. So from like a local government perspective, like do you guys engage at all with, like regulators here, or like what's your experience been like there?
Yeah, well, like I'm sure like maybe some of the folks who are listening to this will remember like last summer, kind of about essentially this time of year, April, May, there was some legislature like going through the Illinois state government about regulating crypto in pretty, say, drastic ways that didn't really make a lot of sense. Would have quite literally forced our company, which does in the grand scheme of things rather safe things, out of the state. And we ended up taking a very active role in that process, particularly because we're a local company, we're a local team, and the product that we've been building over the last year and a half, particularly, is one that's really easy to grasp by even most regulators. We felt we had a very compelling narrative. The folks are saying like, hey, like you guys aren't quite understanding the narrative here. So we ended up writing letters to like, I don't know, 20 or so like Illinois, like Congress state people, and saying to them, I'd say only like a quarter of them replied, but a quarter of them did reply, which is nice. And we published that letter online, and I do think it actually like made it to quite a number of people and influenced ultimately in some small way, like how that ended up turning out in the Senate when it failed over there.
That's awesome.
So we do try to get involved when we need to get involved because it's important. It's where we are. I'd rather not relocate the company.
Of course, nobody wants to uproot like that. I mean, I think maybe that's why some companies adopt more like a remote first culture in crypto, just to give themselves some of that.
I think so. And, the industry is still so small, hiring great crypto talent, regardless of location, so as hard as it is. So a lot of the talent that we have hired in Chicago have been folks that we've transitioned over from Web 2 jobs, whether it may be on the front end or back end. We just had someone join our team from over at Apex Holdings, which is like one of Chicago's greatest fintech companies right now. Join the team, doesn't know a ton about crypto, but is a whip smart engineer and wants to get more interested in the space and more ingrained in the space. We're used to that. Like Eddie and I, my co-founder, we were willing to spend a lot of time with our new hires to make sure that we'll get them up to speed about what they need to know. And in the grand scheme of things, like if you're a smart person, you're going to figure it out. Like nothing that is in the crypto space is rocket science. It just needs a little time and elbow grease and you'll get it done.
Yeah. So what's I want to dive deeper into just like the company culture, just aspects of like how you guys build products and obviously like your team dynamic. So it sounds like you don't really have a bias towards a certain type of person when it comes to like hiring and joining your team. Like, are you
Maybe bias against MBAs.
okay? All right.
How about that?
I have my own opinions of that, but I'm mostly aligned with you.
Yeah, Eddie and I are both dropouts. Like, so I actually only did 2 years of school. Eddie did 1 year of school. He was at Northwestern.
Awesome.
I was at a school called Embry-Riddle Aeronautical University. That was a great place for aerospace engineering.
Yeah.
Before we dialed down the crypto rabbit hole, we're at grapefruit trading for what ended up being 3.5 years.
Yeah.
We're super thankful that opportunity, like, kind of more or less, we got lucky and met the right people at the right time. And then, we're lucky enough to get the opportunity and then worked hard enough to keep that opportunity and work at the firm.
Yeah.
And we really try to like give more folks the opportunity. Our team is a younger set team, and we have the whole age range. We actually, one of the engineers we just hired recently, fantastic senior engineer as well. I think he's like 60 years old or something like that. Like he's up there.
Yeah.
Whip smart, true crypto degen, amazing. We're thrilled to have him on the team.
Awesome.
And then like, we have an engineer on the team, or when we hired, we didn't even know how old he was. And I don't interview, when I interview people, I don't ask them how old they are. And we're in a WeWork in Chicago. I get an email from the WeWork staff being like, hey, someone on your team's below the age of 21. You need to make sure that they don't consume alcohol because, sometimes the offices will do happy hours and such. Like, who the heck is below the 21 team? Ended up being that this whip smart engineer that we hired off of GitHub, essentially, who's was in Utah working for a trucking company over there on like data side of things. Was 19, and like he was at the company for like a whole month. All of us were like super impressed with him. Didn't even realize that he was just 19. We really want to make sure that when we hire people, we bring people on the team, it's purely about like what they have, what talent they have, and what they are possible and capable of. And we want to make sure that whenever folks do join the team, that we're constantly pushing the envelope. Like, it's people say on the team, like we are pushing the envelope regularly in weird ways, and it can be uncomfortable at times working, but when it all clicks and comes together, then it's like super satisfying because you're doing constantly new interesting things.
So one of the interesting things I've seen maybe more recently in with like crypto project in DeFi space, some of the Solana based teams, they kind of just like blow up on Twitter. Like, just some of the personalities are kind of intense. And I wonder, like, if you guys have like a culture of just like, hey, we are finance industry professionals. Like, yes, this is a degen-y, and like the crypto space can be a little more Wild West, but do you ever think about just like, okay, like everybody needs to just kind of have their stuff together in public? Or
I don't know. I think this is one of those things that's kind of more or less accidentally happened for us. And that like the people who join the team have been ones who spend a lot of time on like socials or in the crypto sphere. And part of that, I'll admit, is probably because like we're not necessarily always hiring like crypto people from day one. It's a lot of Web2 like implants coming over. But even so, like, it's like I don't tell anyone like what they can and cannot tweet. It just seems to be like the culture that we've established has been level head, I would say, is like the best way to describe it. And that like, okay, we all know what we're trying to build here. We know that the notion of today's crypto is, especially literally today's crypto, is around meme coins or such, or other new L2 coins coming out, and L1 coins coming out. And that's all fun and good. But everyone at the company knows that like the 5-year vision for us is like securities and equities and commodities on the blockchain.
Right
now, it's 5 year for a reason. That's a ways away for us.
Yeah.
But like, I think we're all in agreement that the way that access and efficiency for trading securities from both people is still really not great. Robinhood even proved in the United States, where I think most people previous to them were like, oh yeah, it's, any American, if they want to trade an Apple stock and go do so.
Right.
I mean, Robinhood just made it brain dead easy and found like another 40 million people that previously folks didn't really understand that they were interested in trading. Like, okay, there's probably still more in the United States, but let alone the rest of the world who don't even have access to American markets. So I think because we've always taken a very long-term approach to things, because we're never like really extremely racing to like sprint out that next feature or something over on our side, even though we're constantly delivering things,
sure,
that it just makes it a more manageable culture for everyone. Absolutely. So maybe just in that sense, we've attracted different crowd.
Yeah. Like for you personally, does the crypto news cycle and also like the up and down bull bear cycles, does that ever, does that affect you in any way?
Yeah, for sure.
Yeah.
I mean, it's impossible. Obviously,
Have you figured out strategies to like kind of harness that energy or like?
I mean, one thing is just spend less time on Twitter. I mean, you go back to like when I was at the trading firm, and I would have like I used two like 40-inch TVs as like my monitors.
Nice.
And I would have one with like all of our trading, everything in systems up live that I need to be constantly watching, and one would just be like, you know, email, Twitter, Discord, Telegram, etc. You know, but I would always have like TweetDeck up on my screen constantly. And once we left there, I was like, well, this isn't a good thing. I'm on Twitter all the time about the trading firm. Not to even say back then I was tweeting that much, just like reading things, keeping a good beat on things. And since then, like fast forward today, like I've turned off the Twitter notifications on my phone. Like I'll really only look at it like in the morning when I wake up, when I go to sleep, and then like throughout the day if someone sends me a thing or like I need to look at like our socials. But otherwise, trying to like really keep my time on the Twitter sphere like more manageable. I do think it's important for founders to do it. So not to say you shouldn't do it at all. I don't think it's reasonable to say you can cut it out, but you just have to take a long-term approach to these things. Otherwise, you're just going to get beat up.
Yeah.
Yeah.
Do you like Twitter for you? Is that a source of just like alpha and like in terms of just what's going on in the crypto space, like what's hot, what's not? Or do you view it as more like as a founder, like there's just interesting stuff in crypto, but it's also tech at large. Like this is my source of
like all of the above, I would say. I mean, like at this point, I get a lot of my news for just like general like worldwide news from Twitter. And I'm like, I like reading the Morning Brew as well for folks who maybe like know that that's like a popular like morning like 5-minute read newsletter, but for just general news to get up to speed on things. But like you just Twitter everything from like trying to find new talent. Like as a founder, I'm constantly looking to see like who's someone that like we're at this point we're kind of always thinking about growing. And it's just a matter of finding the right person, and that word dictates like when we're growing at this point. And so like constantly looking to see like who's saying what or who's going where or where the things are flowing, not just the opinions and the news of people, but it is good to know too, like, yeah, what our competitors are up to, what are they saying, what's the latest marketing strategy on Twitter, all of that. So I do think there is like some necessity of like having to be on the app.
We just on Tuesday, we hosted an event here at 1871, focusing on Farcaster.
Oh yeah, love Farcaster.
Yeah, I was gonna ask you, like, have you transitioned any of your attention or, to like following Warpcast, like?
Yeah. I mean, Oku and like a repost over there daily. We've been trying to like foster a community over there. I will say it's been maybe a little slow for us, particularly. But yeah, I'm more passive over there. I don't think I've like quite figured out like the niche of like what to say necessarily to folks that like they want to read. But yeah, I'll go over there every other day probably and scroll around just for 15 minutes and see like what are people talking about, which way are the winds blowing, just to get a good beat on things, because it is beginning to kind of become its own separate faction from Twitter as far as like what meta is that people are discussing over there.
Sure.
It's just different. Yeah. So I guess it's another data point, but it is one like I've definitely spent a lot more time on Warpcaster over the last month than I did like 3 months ago.
Yeah. I mean, that's a trend. Like the growth trend has been picking up.
It's insane. What they've managed to create over there is like really, really impressive. And from a team that has been at it since like 21. I mean, like a lot of people feel like it's an overnight success for them. And maybe it's been like the parabolic growth for sure is absurd, but they've been grinding since like 21. And a lot of the success that they've seen now has been in the last like literally like 4 months.
Yeah.
So just goes to show that like some of these platforms, to go with that platform thesis that they're trying to build out on, it takes a lot of time, and it is like truly an exponential problem where like the beginning is just going to be a slow crawl, but once you hit that point of inflection, like, oh my God.
Does that give you some like additional confidence that like, hey, look, it takes a long time to build these things, and adoption, we're not sure when exactly it's going to come, but we just, as long as we focus on building the thing that we know is going to be valuable in the future, like we just stay on that path.
Yeah, well, I think there's an important balance that you need to make sure that as you build that platform, you want to make sure you have users along the way, solidifying that at least what you have today is valuable, and then say, my product's only going to get exponentially more valuable as I add more features and functionality or usefulness to that user set as well. But you got to make sure along the way that like you're not just saying, oh, well, I'm at 0 right now, but having 5 power users done, in the first month is great. So that you can grow that into 20 and then 100 and so on and so forth. But yeah, everyone has to start with that foundation somehow.
Yeah. So let's talk about more about, product at GFX, because, you guys are building Boku now, but this isn't the only thing you guys have ever worked on. It was like, we've talked previously and you guys have built a bunch of stuff. So walk me back through to the beginning, the origins of GFX. Like, what was the original product that?
Oh boy, yeah.
Yeah.
I mean, the original product, for what it's worth, I still have conviction, and unfortunately, it's pretty much impossible to build in the United States. So we can certainly talk about it a lot.
Yeah.
When Eddie and I were at the trading firm, and we were deciding whether or not it was the right time for us to leave, we're having long chats, and he's like, Dad, if we do leave, like, what are we gonna go do? And I'm like, well, like, here's some ideas. And Eddie, for anyone who's met him before, will tell you point blankly when he thinks you're wrong or your idea is not a good one. And I pitched them the idea of, like, it'd be so awesome that if I had my money on Compound, I could go down to the store with a card and I could swipe it and I would use my collateral, my ETH collateral on Compound, and borrow USDC, get and sit automatically and pay for like my good or whatever service I like paid for at the store. You just make that a really seamless UX, a great way to introduce to folks a new way to think about savings eventually, a new way to think about savings. Because the notion of credit cards right now of having to pay it every single month is really not particularly feasible for Americans, and for many low and middle class Americans with not a ton of income.
Yeah,
they run into this like visceral loop of not being able to like start saving money because they're spending money and they're having to pay off their debts with cash that they've earned, and they never get to a point of having cash to actually save.
Right.
So the idea in my mind was like, can we get to a point where someone can take their paycheck and immediately put it into like something really safe, an S&P 500 ETF, maybe even like US bonds.
Yeah.
But use that as collateral. That's your investment, and then borrow cash against it to pay for, your whatever you're buying at Target or something, your mundane things, just everyday life things, because that way eventually you have actually like your liabilities and a depreciating asset that is the dollar, and you're, have eventually assets over here on the other end.
Yeah.
And start off small, but at least that gives a way to break this like cycle for folks. Now, obviously, like that's again like a bit of like 5 years. Someday will be equities and commodities on Oku thing. It's gonna be a while before you can realize that vision. But you have to start off with what I saw on Compound initially was like, oh, like this UX is actually quite buildable,
right?
And it becomes just a regulatory problem more or less. So that's what we started the company on originally. We went and pitched it to the Visa guys and got a Visa's FinTech Fast Track program over there. And we're like, okay, if we use Visa's buy-in, then like we surely can like convince enough other like a bank and a card processor to like partner with us, on this. And we have the crypto knowledge to make it happen. We just need to get the card knowledge, and card knowledge is more abundant. So we're like, okay, we can figure it out.
Yeah.
Obviously, with this card, it is not launched, so it didn't end up working out. But essentially,
there were a lot of bridges you needed to build between, TradFi rails and DeFi rails, and make it work.
Well, the technology side is the easy part there on that one. It really came down to the regulatory side of like, oh, okay, even with Visa's like stamp of approval on us and being in the fast track program, that went from like, okay, people wouldn't return our phone calls. We couldn't even like talk to a bank or a card processor, to being like, oh, okay, they'll pick up your phone call and then tell you your idea is crazy. It's like, well, that's at least nice of them. And we finally found someone to like launch it with.
Yeah.
We built out the whole interface, the whole card product, got the card design picked and everything.
Yeah.
I actually still have the card as like my background here on my phone if you want to look.
Yeah.
Shoot, I have too many notifications on my phone screen. Yeah, I'll show it to you after. But I still have the card on the background of my phone screen because I want to build this thing someday. But yeah, we got within 2 weeks to launch this thing, and our banking partner got caught up in the OCC, which is the United States like Office of Comptroller, who's like regulates like more like the cop on banks essentially.
Yep.
And this was back in 22. Yeah, summer of 22. They did a whole like fintech crackdown essentially, and fintechs are not using banks properly and up to like full regulations, and somehow our banking partner kind of got caught up in this and then got tossed. Then we had to find a new banking partner with our card partner still, and that was going to take like 5 months. So okay, put that on the shelf, come back to it 5 months later.
Yeah.
And then once we started getting that going, just as we were getting going online again, Terra Luna happens. And then Terra Luna spirals into FTX exploding. And then once FTX exploded, then it was like done. We were even trying to get our own MTL licenses. Like we had a few of like MTLs in our land, or money transmitter licenses for folks who aren't familiar, which are amazing things if you can get them, but because they're regulated on a state-by-state basis, make it really hard. So it's just one of those things where the idea is there. Someone someday, maybe us, will build that and it'll be great. In the meantime, though, like no one in the United States has been able to build this product. Meanwhile, like they're building the exact same things at this point in the EU, no problem, because the regulatory environment there is a little more, not even per se favorable, just defined. Whereas here it's just not the case. That's a good example of like where founders are succeeding at doing this elsewhere.
Yeah.
There's not many of those examples, I would say. That's one of the rare ones, but somebody will build that. But that was the first year of the company, essentially, was trying to build that product.
And at what point were you like, this is not feasible, we need to pivot?
We had started the company with the idea that we would do multiple things to hedge ourselves from the get-go.
You were a labs company.
Like a real labs company. Like we wanted to model off of like AT&T and Bell Labs, and like, okay, we're going to build our cash cow, and we'll have one cash cow, and that will funnel all of our fun research and development ideas on the side.
Was it easy to get buy-in from investors for that model?
Our initial set of investors when we started the company was like, we raised $2.5 million in like a seed round from mostly crypto friends that we knew in the industry. It was essentially one big angel round. So it was like half of it came from folks at the trading firm that we left behind because they believed in us. But it ultimately was, like every check in that round was someone that knew us pretty damn well or was very good friends with someone who knew us really well. Yeah. And they'll just trust it in like Eddie and I's ability to like figure it all out. Very true seed round. They're like, we're just investing in these people. We'll believe that you figure it out. Here's the vision for Poppy. Okay, if we'll believe you can figure it out, even if you'll pivot into something else.
That's got to be very liberating to have sort of that blank check to, play around and figure things out, because I think in crypto you have to be extremely flexible.
Extremely.
Where you focus your attention, because the meta changes all the time, and what needs to be built out can change all the time. We see like the biggest projects, like layer ones, like Near has changed their narrative. I don't even know what they are anymore. So that's awesome that you had that initial support. Have you guys had to go out and raise more money?
We have not. That's not to say once upon a time we did try. So I mean, the first year and a half of the company was, in hindsight, us making a lot of mistakes, figuring a lot of things out as fast as you could, and then fixing those mistakes as fast as you could. And that's the key part. Like where startups, I would say, generally fail is like they don't do a good job getting back on the horse when they realize they screwed something up. And that was like what really set Eddie and I apart, is like, we're totally fine admitting we were wrong and then just fixing it and just getting on with it. And so, like at one point, the company was like, near to have cash. We were doing so great. And we were like, okay, we have option A, B, and C. These are like our three like plans that we need to execute on. We need one of them for the company to survive. We need, two of them for the company to be in like a good position. And we need three of them for the company to like thrive over the next few years. Yep. And it ended up being that we got 2 out of the 3. So that's like how the company managed to get to today. But we like grinded on these things for like a solid 6 months, a very scary 6 months. And it ultimately all like panned out, like not ideally, I would say. We got through, especially given the fact that the barrel was a lot longer than I think any of us anticipated.
And timeline wise, where are we at here? Like
this is August of 2020 / like August, September, October.
So this is like right before the previous bull market.
Yeah, so Terra Luna exploded in May.
That was June 21, right?
That was 22.
22, sorry.
Yeah, 22, sorry.
Okay,
yeah.
So this is the beginning of the last bear.
Yeah, so like the company had been around for like was coming up on like 7 months or so.
Okay.
And we're like, okay, we made the classic mistakes of hiring too many people too soon and scaling too fast and not being focused enough. All your classic mistakes, of course. And one of those things though, you just gotta make the mistakes to yourself, I think.
Everybody do that, right?
Unfortunately.
Yeah.
Realize in like April of 21 that market's not on a great trajectory, things aren't looking good, we need to pivot our strategy. So we started to do that, April, March. And then May, June, I think it was early June, Terra Luna exploded, maybe like June 5th or so. Terra Luna explodes, market melts down. Yep. We launch Interest Protocol, which is this bar line protocol we had was designed kind of marrying the idea of a maker down compound.
And was this a second? This is what you guys did after?
Yeah, like the idea was we were to work it into Poppy, which was the card product, and so like we were marrying these two ideas together instead of like sending all of our flow to Compound. We were going to kind of build our own barline protocol and send flow to ourselves. Was what made a lot of sense. Yep. Launch this, Terra Luna explodes, market melts down. and just, continues to die through the summer.
Mm-hmm.
It was around this time that the Uniswap Foundation folks had given us a phone call, and they're like, hey, the foundation wasn't even started yet. We're thinking about starting this thing. We're big delegates over at Uniswap among some other DAOs. What do you guys think, etc.? I'm like, this is a great idea. Would love to have an organization who's wholly focused on the nature of the protocol and the DAO. So at this point, Uniswap Labs was beginning to have their own set of priorities from the DAO. And it was going to be really nice to have someone who could really focus on the day-to-day efforts of the DAO specifically.
Totally.
And I was like, what are you guys going to do with the money? Like, you want to, they're asking for $60 million for folks who aren't familiar on the forums. And we're like, that's a lot of cash, but what's the plan? Paint this grand picture. And they're like, well, what do you think we should do with the money? So I came back to them with kind of like a handful of ideas. And one of them was what ended up becoming Oku was, hey, we've been in this industry for, at that point, coming up on 5 years. We've seen what protocols succeed and fail. We have an idea very well of what traditional exchange looks like. For some reason, DeFi isn't really doing a great job closing this gap with CeFi.
Yeah.
And we think a big reason that is on the UX side. We spent a lot of time as an industry focusing on the protocol and a lot of time focusing on infrastructure, but not a lot of time about just really making it super easy for folks to transition over from Binance, at the time FTX, onto something that is trustless and more transparent and often even just more efficient to use as far as from a cost standpoint.
Right.
And so we pitched this to them, and they were like, oh, this is a pretty good idea. I mean, it took us, I'm simplifying, this was like 3 months of like pitching essentially in turns on ideas and iterations, but
To the Uniswap DAO.
yeah, the DAO / like the foundation. So before they funded, and then they got funded, and in October it was announced we were awarded our grants. At that point, we were kind of working on interest protocol and then building out on the side. Oku at that point was called Uniswap Diamond, was like the public name of it.
Okay.
So the company had morphed a lot over that like 6 months. We seriously like became much more of a buttoned up, legitimate organization, I would say. Not to say that it was craziness beforehand, but like we learned a lot through that period of time.
Oh, sure. And in terms of like who you're targeting with Oku, like who do you think are going to be the initial adopters of the client, of the interface?
Yeah, so the way we kind of break this down at a really high level is there's kind of like 3 phases. Phase 1 is like you need to get like buy-in from like your DeFi users today.
Yep. And
your power DeFi users. So this is particularly what we categorize like a power DeFi user, someone who's active on multiple chains other than Ethereum and with like some reasonable amount of money. And like we need to get buy-in from these folks to build the product that we want 5 years from now, essentially. It's like kind of a requirement along the way.
Sure.
So get buy-in from these folks is which we've been focused on for the last year since we launched Oku last July. And then from there, once you've got that buy-in, now we're kind of going to zoom out and say, okay, how do we get buy-in from people who are like pretty active on EVM or on chain, but not necessarily like touching trading platforms on chain? So like, just setting coins around essentially is like the best example of that.
Sure.
Not on Coinbase or Binance quite yet, or like past that point, but not super into DeFi. How do we get those people to feel like this infrastructure is more friendly to them than what the status quo has been?
Interesting. Well, from what you've shown me in the past, like the Oku interface, it looked like a very professional trader interface.
Yeah.
Like it's kind of like when you flip on Coinbase Pro.
Yeah.
That's what it felt like to me.
Yeah. So, and that was exactly what we were going for. So yeah. that was the plan. We wanted people who were trading on like Coinbase Pro, the Binance interface, to feel like, oh, this is friendly. This is something I'm very used to seeing, except it's just on chain instead.
Right.
And so that's absolutely what we were going for. So we want to get those users. Now, in hindsight, we probably should have gone about it a little differently, as one might. We probably went for those advanced users a little too soon, and we should have focused on DeFi users a little more aptly. We had to maybe backtrack a bit for it. But in the grand scheme of things, it's worked out amazing because like folks understand where we're going, and like yourself, they come on the platform and they're like, oh, okay, I understand like what I'm supposed to be doing here. It's very clear. And that ultimately in the long run is going to make us a much stronger platform because we've already been essentially working on getting those users off of Binance and all our larger traditional trading platforms a year earlier than we maybe should have.
So what, first of all, the product is launched, right? It's
launched. Anyone can go to oku.trade.
What do I need to, can I simply connect my wallet?
Yeah.
Going or?
And better yet, you don't even need to connect your wallet. You can just go on the platform and start scrolling around. I hate it when applications make you click, like, open the app, try app. There's none of that. There's nothing like, until you want to actually do something on our platform, you don't have to connect your wallet. And once you connect your wallet, I'm not going to make you give me your email or any of your information as well.
And because you're based in the US, do you have any KYC requirements? Do you have any limitations on the coins that are accessible, from Uniswap? Do you have to sort of like limit your list of like whitelisted tokens?
Yeah, great question. So as far as American company, American team, etc., like we do comply with like the OFAC sanctions list. So if you're someone that is down in Iran or in North Korea, you're not going to be able to use the Oku site. Same thing with like our wallet addresses. There is like wallet addresses that aren't that are on that OFAC sanctions list as well, and like they can't use the site either. So those are like two general like precautions that we take to make sure we maintain compliance. And then in addition to that, as far as like assets go, there are a handful of assets in the platform that like the SEC's made strong arguments against of being securities, or just have already settled with them and said they're securities that begrudgingly we've said, okay, probably not best to like also allow people to trade those assets on our platform if that's kind of become the status quo. I'm really hesitant to do those things. I'm a founder very much where like I think most founders kind of just listen to their outside counsel, and there's often outside counsel is going to be more cautious than internal counsel. It's like we made the decision, like the 10th hire of the company was bringing in internal counsel, so that way we made sure we had someone who was always incentivized to appropriately push the envelope with us, where I'm saying, hey, I really want to try to find a way to do this thing. How do we make sure that we're doing it in a compliant fashion? And that's really helped us get a leg up on what the status quo has kind of been, unfortunately, for like American-based DeFi companies over the last couple of years.
That makes sense. So I have a technical question for you, because I've always been curious about when you're building clients on top of these protocols. Obviously, the client needs to extract a fee. You guys need to make money, and you'll do that on the client side. But I've always been curious, how does that fee split actually work between, the 0.3% LP fee versus like you guys take an additional cut?
Sure. So there's a few different ways like how like protocols do today. Now, on our front end today, we don't take a fee on swaps or anything. So anyone can go to the front end, trade across any of our liquidity sources. There's no fee, but we can kind of break it down into a few different categories. So obviously, if you come and trade on our front end, you are paying the Uniswap protocol fee or wherever that liquidity is coming from. So in that case, that fee accounting is occurring at the protocol layer. We don't even have to think about it or worry about it. It just baked into whenever you touch the protocol in those pools. At Uniswap in particular, there are a number of different like fee tiers. There are some pools that are as high as 1%. You have your 30 basis point or 0.3%, your 5 basis point, and then your 1 basis point. 1 basis point is where you trade like your stablecoin pairs. That's actually something like GFX Labs brought about in Uniswap. We were the ones who pushed for the 1 basis point fee tier to be added.
I actually am shocked, because I knew about the 5 basis point one, because that's like kind of the curve standard, and that was just a stable, like pair standard. But who's making money at 1 basis point?
You make money at 1 basis point when you're trading like DAI for USDC or like USDT for like USDC. So
volume's got to be massive though.
Yeah, but that's the case. Like it is just massive volume. Like the biggest markets on Uniswap are generally, like as far as volume goes, are those stablecoin markets. But that's the same thing for any traditional exchange too. Like when you go on Binance and you're looking at who's trading the most volume where, it's often like those sorts of pairs. They're still important pairs because outside the United States, Tethers are dominant. It's a very American-centric thing for like USDC to be like the norm, but it's actually Tether in most places.
Right.
So yeah, you have those fee tiers in Uniswap, obviously others. When you look at the like MetaMask, Rainbow Wallet, Uniswap front ends, how they implement their fee typically is at the router layer. So they'll build a smart contract on top of the core protocol, and they'll pass in some parameters there and say, hey, we want to make sure like we're getting our fee on this. Now, sometimes like if you're trading for like ETH USDC, it's as simple as saying, oh, I want to take out my 85 or 87.5 basis points out of ETH or USDC. Generally, folks are going to take the USDC half there. Sometimes if you're trading something for 2 coins that aren't so popular, then there might include an additional leg in that trade to get that unpopular coin into like a USDC. Or sometimes depending on the platform, they'll just accept the unpopular token as like their quote unquote fee, and then have a secondary automated system like trade that for USDC for them down the line. So there's a few different ways to slice it, but it's always been like infrastructure on top of it. There's a lot of different ways though you can slice this though, for sure.
Interesting. So I imagine these implementations all have a little bit of additional gas overhead.
Yes.
So which is obviously going to be passed to the
Yeah.
user. So how much time do you guys spend about, think about just like smart contract optimization and doing?
Honestly, not much at all.
Okay.
Because for us, a lot of the activities not on Ethereum. And just increasingly so, on Base or Optimism or on Arbitrum.
Well, Oku's already supporting all these chains?
Yeah, we're across 15 chains actually.
Amazing.
Yeah, we add about like 2 chains a month right now. We'll be at 20 by like early July.
Walk me through the process of, moving to a new chain. I imagine everything that's EVM equivalent is super easy to just like redeploy those.
Yeah, I don't want to say super easy.
Yeah.
It's something that we've particularly spent a lot of time on making sure that it is easy for us to add new chains. I would say like that's part of our edge versus some of the legacy systems that are out there. But ultimately, like it is like a whole other thing you have to worry about as far as uptime and possible downtime goes to. Routing is different on chains. Some chains do, even if it's even if it's like 99.9% ETH, EVM compatible, there might be like one weird change. This chain might treat gas slightly differently than another chain. And like there's always enough where it becomes a little bit of a headache to add each additional chain. But we've spent a lot of time making that easy for us. The biggest thing is like infrastructure. So for us, most applications when they add new chain support are typically relying on some third-party infrastructure to index like events for them or something in between or some type of information. We have been in this industry for a while and have dealt with indexing information since the trading firm time when we were indexing a lot of information on chain. And so we've gotten pretty good at getting information off chain into a database and then cleaning it and doing it at speed and at scale. So we use a lot of that experience to like amplify Oku's ability to support new chains, because there's just so many transactions on Uniswap when you begin to add up all the different chain deployments. We added this to the front end recently. If you go to the Uniswap landing page on the left hand side, there's this fun thing. It's a transaction feed. It'll show you trades as they come in across every single Uniswap deployment.
Yeah.
People, I don't think, realized prior to this how many trades are actually occurring on Uniswap when you add up all the deployments. It's pretty wild. Like it's a proper trading system.
Yeah, no, absolutely. It's just fascinating to me from a perspective of like you guys are using these rails in a way that looks familiar to the traditional traders and TradFi people. And I think, but what's happening behind the scenes is a lot of like software engineering alchemy to make all that happen.
Yeah.
One of the things, like as a founder, that I keep thinking about is how infrastructure wise we have to actually add an additional layer of complexity when we build out these products, because it's not just a front end and a back end now, but it's a front end and 2 back ends. You've got a blockchain and you're still using a traditional Web 2 database. You still have your SQL.
And like multiple in many cases too. Like we have a whole separate system for order routing on our platform, a separate system for oracles, a separate system for the front. I mean, yeah.
Well, so my question to you is, do you ever dream of a day where literally it's a front end and a blockchain and nothing else is needed? Like, do you see a future where that is feasible?
I don't think so. I think there's a lot of really important work that's been happening, particularly on the networking side of things.
Yeah.
That isn't often appreciated because it's just not sexy to like think about how networking happens and how like a team in Chicago can make their site perform for folks in Indonesia or something. And I think some of that stuff like doesn't need to be on a blockchain. Ultimately, what really needs to be on a blockchain is like the asset settlement layer. And I think we're fighting that down as much as possible, such that maybe today transactions are cheap on Base and on Optimism, but we're also dealing with a pretty small percentage of the world. Right. Like we still have a net scaling problem in the industry of like, how do you actually make these platforms at the protocol and infrastructure level? So that's the other thing. I don't mean to say like people shouldn't focus on infrastructure, like the protocol side of things. We can only build Oku to the level we can do it today. With such a lean team that we have, because so much time and effort has been put into like infrastructure. Yeah.
Right. So compared to building in TradFi, like when you were, how much of your time did you spend when you were in that world, actually like building software versus just were you more like a trader at that?
I personally was more on the trading side of things. I spent maybe like 20% of my time doing like, I don't even know if I can like literally say it was software. I spent a lot of time building basic trading scripts for all sorts of different things, particularly DeFi based things or DeFi liquidations. And then once I could prove my concept out, that it was Eddie's job to make my script actually efficient and usable. So a very classic thing in like prop trading is that like you need to seize the moment when you find a trade. Your trade's probably not going to last longer than maybe a day, maybe a few weeks. Like, and so often it's just like do whatever you can to get like the most basic thing to get whatever edge you have only as fast as possible, and then make it efficient later. And so that's what I was, good at doing, was find the edges of the opportunity and exploiting them to whatever ability we could as fast as we could. And then Eddie was really good at actually making those robust processes. And that's the beautiful part about like Eddie and I, we had worked together for so long at this point. And we went to actually high school together too.
That's awesome.
That we know each other very well on how like our brains operate and how we work and like what we're going to do under pressure. And we're just like, we're aptly, like we really trust one another. Like when I know he needs to get something done, he'll get it done, and vice versa. And our skill sets are actually just entirely different. So it works pretty well. Yeah.
That's awesome. Okay. So let's zoom out, look big picture. A lot's happened in the past just week on the regulatory side. Just seems like the Democrats are shifting their a little bit after seeing the backlash from, voters and stuff. So one, I want to get your take on that, but two, I want to get your sense of like where you think we're at in this crypto cycle, what the next year looks like, and how that plays into what you guys are working on.
Yeah, I think everyone's excited for Gary to move on and find a new career.
Or Gary. So actually, I would never thought for Gary. He's done this himself.
Yeah, exactly. That's the thing. As much as I'm like okay with regulators doing regulators' jobs, like they've gone far beyond what they should be doing at this point, and are just causing straight harm to American businesses. And then you zoom in on like the micro of like even Chicago, and it's just like legislators still have such a misunderstanding about what the industry is and what we're trying to do. And I think it's going to take us a long time to actually get the message out to everyone. So like we've worked really closely. We actually have a proposal up right now on the Uniswap forums to support the DeFi Education Fund, which is a group that works on a lot of political efforts and helping teams that don't necessarily have money to kind of defend themselves when some of the larger branches go after them. Do so as well. I think it's great that it's becoming a more topical issue within like Congress. I think that's like a really good positive thing. I think we do have a lot of cleanup left over from the FTX era to deal with, and it's going to just take a long time. And we'll just see what happens in the next administration. I'm kind of of the opinion that like people generally put more weight into the administration change than is like actually like worthwhile. I think of the grand scheme of things, it'll just be nice to know that like Gary's not at the seat. I think that's actually the more important thing. And I think we can probably accomplish that even if Biden gets elected.
Yeah.
And in the grand scheme of things, like, I think there's having a president in office right now for another 4 years, regardless of who that person is, even though I'm really not excited about either of them, is just going to be a net good stabilizer. When you zoom out on the macro now, and it's like there's so much happening in the world and so much happening in the United States that just like having some stabilization, let alone for crypto, would just be good for everyone, for everything.
Yes.
And ultimately, crypto's still a pretty small piece of the cog in the machine. So we kind of do need the winds net on the macro to be blowing in the right direction for this thing to, be a little extra productive, I would say.
Yeah, for sure. So, okay. So then in terms of markets, are you feel pretty bullish about where we're at? And,
Yeah.
Also, do you believe in the cycle theory? Like, do you really think like crypto goes through these bull bear cycles? Like,
yeah, I think the cycle theory is true. Like whether like the nature of like timing on it exactly, I don't know. But yeah, I mean, I think it's like pretty clear across like any industry that like things are going to have like their booms and their busts, and like crypto with the way the industry is set up through incentives is very much susceptible to like those booms and busts, probably more than like any other industry in the history outside of just traditional financial markets. It is. So,
well, one thing I think with crypto, and I think it looks amplified because it's all liquid and it's all there for people to see these price fluctuations. Whereas like private equity, VC, they can hide a lot of that, you know?
I think that's true, but like penny stocks have been around for a long time. That is a pretty crazy place. And Wall Street Bets is a pretty crazy place.
Yeah.
So, I think when people talk about like, take for the the recent GameStop stuff that just happened in the last couple of weeks with Rory and Kitty coming back online, like, why does there so much excitement behind those things than there is from crypto still? And I think that really does come down to like Oku and applications like Oku need to do a better job making things more accessible for like those types of movements to even be possible in our industry.
Right.
And that just like goes to show that there's still a pretty big gap from like infra and UX that exists in regular equities markets and like what you can do in crypto. But there's people who want to do these things and be those activists. It's definitely going to like happen in our industry sooner opposed to later.
So are you guys geared up for maybe an influx of new retail showing up for your platform maybe in the next year to 18 months?
Yeah.
And like, how can you optimize like your onboarding to make that happen?
Yeah. So like kind of like I mentioned before, like today has been in the last 6 months have been all about supporting like today's users and making sure they have optimal experiences and then leveraging like our time infrastructure and making their experience good into better experience for future retail users.
Mm-hmm.
And so the last 6 months have been dedicated to a lot of platform and efficiency improvements. You go on Oku today, the site is so much more performant than it was 6 months ago. And like users love it. It's actually a huge difference. And that's not even to say we were slow 6 months ago. We were actually still really performant then as well. Yeah. Just in hindsight, I was like, wow, it could be that much better. It's pretty great. Moving forward, it's like, okay, we're going to be bringing on-off ramping and bridging into the platform as well. And that's just going to continue to really hammer home our platform thesis for ourselves and then refine it such that, okay, it'll be usable and a good product for more advanced DeFi users. How do we use the remaining of the year to not only grow the scope further of Oku and the features that we offer, but then actually make the retail experience for new folks that much simpler?
Yeah, because I think your base level assumption right now is that somebody will have a wallet and they will have funding.
And I think that's like the funding in the wallet part, we're not going to assume because that's why we're bringing on-off ramping into the interface is because I want like people to be to choose if they want to bring their own wallet.
Yeah.
I think at the long run, like the wallet stuff is like film cameras, essentially. Like it's just temporary thing that made a lot of sense for some time, and now we all have iPhones in our pocket, and like no one like buys an Nikon DSLR anymore or anything else. Like, I think.
Are you saying the wallet will be baked in at like the OS level in the future?
Eventually, yeah. I think we're like a ways away from that being like possible through account abstraction and stuff, and that's gonna like account abstraction is still brand freaking new in the grand scheme of things.
Mm-hmm.
But that's like the end state. No one is gonna want to actually make a wallet who's a Coinbase user today, who's a Fidelity account, E-Trade user, etc. Like, how do you get these folks who are trading, your average retail user on an average platform? They want that same UX. Yeah. It's our job to recreate that as closely as possible while maintaining like full DeFi ethos.
Yeah.
And I think it's entirely possible. You can go on Oku today with an email address and it will create you a new wallet thanks to Wallet Connect and you trade on there. Problem is you do have to come with your own gas money today. Mm-hmm. But I mean, we implemented that like 2 months ago. And like Wallet Connect team implemented it at the same time. We're the first users of that feature. So there's a lot of time on the clock.
For sure. And you're right. It takes time to build this stuff out. And I hope that it's not just about recreating today's experiences for the average retail, but it's making them even better. Like we want people to feel like, oh my God, this is so much better than what I've been using.
Right. Yeah. I mean, the nature of it is like, in order to get users actually to come over, right, you have to be like 5 to 10 times better than whatever prior product they were using.
Yeah. Decentralization's not enough.
Decentralization is not enough. Most users will not care about it.
Right.
But I think where decentralization plays a really apt role in allowing us to compete with Coinbase and eventually like a Fidelity and an E-Trade and such is efficiency on our end. You can take a team like ours, which we're 20 people today, and a very lean 20 that is as well. And we're only recently actually 20 people, and see how far we've made it with our infrastructure, our resources available to us. And then you compare us to Coinbase, who has 4,000 people.
Yeah.
And it's like, okay, well, like, how can a team like ours already build pretty good product all around? Obviously not to the scale or size of which the Coinbase has achieved, but with a substantially smaller team. And it's because like we don't have to worry about maintaining exchange uptime like Coinbase does. Like that's going to be like a whole department of people that we just don't have to worry about because we have the blockchain to it. You know, how do we worry about custody of user funds? We don't need to do that either because like folks are going to master self-custody either using a wallet or they're going to use some of the new wallet tools that like allow you to use an email with the website instead. Like, okay, that's something else we don't need to worry about. That's like a huge, gigantic bucket for them.
Yeah.
Now the regulatory overhead of like custodying assets and compliance across the world. I mean, don't get me wrong, like we care about compliance. We're a pretty small team to have in-house counsel, but like you can do these things so much more efficiently when you abstract over a bunch of your infrastructure onto the blockchain instead. So it's not that users 5 years from now need to care about decentralization. It's they need to care about the UX that we can create with a lot more purposely for them, I would say.
Yeah. Yeah. It's a world that I mean, the holy grail is just a win-win for everybody. The team's built.
Yeah.
And users, like everybody should realize and see these efficiencies very clear.
Yeah. And of course too, like the only way you can build a product that's 10 times better than what users are used to is at some point try to build a product that's equivalent to what they are using. You have to, like, I think a lot of folks, and maybe this is where I'm wrong, I don't think I am, believe that you can kind of just like leapfrog steps along the way and just like, oh, I can just like overnight build a product that's 10x better than like whatever else has ever used. I think in some cases you can do that. I think those are like amazing software companies that can do that.
Mm-hmm.
I think when you're talking about financial tooling, that becomes really hard to do because there's just so much, historically speaking, and trust in these systems that are required for users to get comfortable with it. I mean, there's even crypto users now who want to go use an on-off ramp feature that we're adding, and we have to ask them for their social security number.
Yeah.
And that just sucks. Like and a crypto user who's already used to putting their social security number into everything doesn't want to do that. No chance retail is going to want to do that. So there's some of those like finer points where it's just like that stuff's going to take us time to figure out, and it's less so like tech problems and more sort of just regulatory ones.
Well, you sparked my thought on
Perfect.
a specific area where I think like we could do a lot better in terms of user onboarding. Are you bullish on any identity solution, something where it's almost like your crypto like social security card that is just like in your wallet, and all you would have to do instead of asking for a social security number is just be like, can we have access to the information on this card? Can we see your card, right?
Yeah.
And that just lets you in.
I think it's inevitable. Like someone's going to do this and they're going to do it very well.
Yeah.
I think the problem is like no startup's going to succeed at doing it. The only people who can really do it are like the major KYC providers today, or like a world government. And then, like the governments aren't going to do it, obviously. So it's going to like come down to like one of the top 5 KYC providers coming about, or you need to be a startup KYC provider, scale yourself into be the top 5, and then do it after that.
Maybe it's Sam Altman. Maybe he'll get your iris.
Oh yeah, I've got my iris scan. I went and did it.
Yeah,
I was a fan. I think like there's a lot of merit to like making sure you can prove that like you as a human are unique from another human. I mean, just look at like polling in the United States or like in Chicago. I was going to my vote a few months ago.
Yeah,
and you know I'm not a particularly experienced voter off chain, and I went to go vote, and they have you like select like a party, obviously, and I put down independent. They're like, nice woman at the point, I was, sweetie, you don't want to do that. You won't be able to vote for anything. And I'm like, why? They're like, there's no independent candidates. I'm like, you mean I can put down my party, but I can't vote for just whatever candidate I want? No, you can only vote for your party's candidates. I feel like I'm a relatively educated person.
Mm-hmm.
I didn't understand this. I was like, what do you mean you can't just like select whatever party you want and then vote for whatever candidate you want?
Right.
And it's like these polling systems. Now, obviously, that example is just bureaucracy, but like there's just so much of it. It's like, oh, like, have friends who have like lived in Chicago for years who aren't actually like Americans, you know, or dreamers, etc. They can't vote. All intents and purposes, if they wanted to go physically vote, they could go vote. Right? There's nothing actually stopping them from doing it, other than like the hand wavy fear that like somehow you might be caught. But obviously these systems aren't at all sophisticated. Like we have technology like now, like WorldCoin and such, and what they're doing over there with their orb. Like these platforms exist. It's just technology problems now, getting like the government to adopt them to solve these things. So anyway, sorry, that was a tangent, but
No, I mean, we go on for hours. I think we've covered a ton of stuff. It's just like, you're endlessly fascinating, man. I love to pick your brain, and, you know, obviously thank you so much for coming in and doing this. I want to give you a chance to just like plug anything you want in with, you know, in terms of you personally, or GFX Lab stuff. And then also like your socials for anybody out there who wants to, you know, follow you.
yeah, thank you very much for having me. For anyone who's trading on chain, I'll obviously go check out oku.trade. We have a great platform on there with like 9 integrated liquidity sources. First, you got every single EVM that you could possibly imagine, it feels like sometimes, with more coming. So if you're ever going to a new chain and you're like, where can I trade that I know I'm going to have a good user experience, Oku's there for you. And then from there, like liquidity providers, LPs and such as well. That's the other part of Oku today, is actually with Unispot V3 providing liquidity in these new chains as well. Analytics and information as such for folks who are actually token holders of like Uni or MKR or Optimism or Arbitrum tokens. Like, we're a rather prevalent delegate at each of those places. You can delegate to us at gfxlabs.eth or MakerDAO. You can call me up and I'll give you some information, because we're all have to be anon over there. It's a fun world over at MakerDAO.
Fun.
And yeah, you can follow us on Twitter at Oku Trade, or myself, like Getty Hill. So
Awesome. Thanks again, Gay. This is amazing.
yeah, thanks very much for having me.
All right.